What's going on, IML family? This is Mr. Legarreta, Chairman Leader with iMarkets Live, and I want to welcome you into our organization, into our team. This is going to be a phenomenal year for everybody working with us, very hand in hand. So, with that being said, I want to get straight into it, and I want to give you a few different solid points that's going to help you see success with our trading side of the business. So the first thing I would do if I was brand new, just like you guys are here today, is I would download Telegram. And now to get plugged into our mentorship group chats with your leader that got you started. So Telegram is mentorship group chats. Number 2 is download MetaTrader 4 and start getting on a demo account. Or talk to your leader and tell them, hey, look, man, I have $100+ I want to invest into a real account, right? And start opening up that account so you can start seeing an income with our products and services. But MetaTrader 4 is the trading application we use to execute our trades in. Right? And the next thing I would do as far as our products and services is I would get connected and start learning from the videos on IML Academy. You see, the more you learn, the more you earn. And my first priority in this business, and your first priority should be to start getting educated, because that's what's going to create an income for you with, again, our trading side of the business. So I would go through IML Academy. You can find that on imarketslive.com and start watching 3 to 5 videos per day. Each video should be about 5 minutes, 9 minutes, maybe at most 15 minutes. So I would watch the videos and I get educated. And if you do that 3 to 5 times per day, that's only about 5 hours a week, since the videos are very short. But if you start taking notes on it, you're going to start understanding the concepts, terminology, and different things you need to understand about the market to, again, start seeing an income with our opportunity. The next thing I would do is I would get connected to our IML TV. And you can access that through imarketslive.tv, right? So there's many different educators, about 72 of them, but I want you to click on English, and there's gonna be different drop downs. You're gonna have Forex Basics, you're gonna have Forex Advanced, you're gonna have Harmonic Scanner educators, you're gonna have Web Analyzer educators. So aside from the Academy, I would watch about 2 to 3 IML TV sessions per week, just so I can take the concepts, take the terminology, and start really putting in the application of these things, so you can start generating income with the trading side of the business. So we have IML Academy, we have IML TV, download MetaTrader 4, and get connected to Swipe Trades. Get connected to our Gold Cup and Teacup services. Start learning how to use our Harmonic Scanner. There's so many tools and resources you can access to put yourself in a better winning position. So again, you can start winning financially with iMarkets Live. Now, what I want to do is I want to give you a quick rundown on the Forex basics. If you don't know anything, this will teach you from scratch at least how to use our services and how to really start understanding this market and having a better perspective on it. Here we go. So this is our Forex Basics training, and it's going to give you some really good insight to understanding this market as a beginner, okay? So we want to walk you through over a few things. Understand that Forex is very short for foreign exchange. This market is open 24 hours a day, 5 days a week. You see, the market opens Sunday at 5 p.m. Eastern time, right? It runs 24 hours Monday through Thursday, and it closes Friday at 5 p.m. Eastern time. Now, when the market is closed, you can't execute positions. You can't, close out any trade. It is completely frozen up until the time that it opens up again Sunday at 5 p.m. Understand that Forex is the largest market in the world. It's trading about $5.3 trillion in volume per day. And we actually trade currencies, right? So there's 8 major currencies that we professionals trade. We have the US dollar, Canadian dollar, New Zealand dollar, and the Australian dollar. We have Great Britain pound, Japanese yen, the euro, and the Swiss franc. We also do trade commodities like gold and Bitcoin. Now understand that yes, we have 8 major currencies, but when we trade in what's called currency pairs, and there's over 20 of them. As an example, right over here on the bottom right hand side, we have Euro USD. The currency on the left hand side of any pair is considered the base, and the currency on the right hand side is considered the quotes. Okay, so who participates in this industry? We have banks like Chase, JP Morgan, Wells Fargo. We have hedge funds. We have retail markets and governments, right? Now, if you look to the right hand side, it's like, John, when do I trade Forex? I have a job. I have a lot of things going on. When's the best time to trade? Well, there's different sessions that happens, right? And again, it's all in Eastern Standard Time. So as far as the European market is from 2 a.m. to 10 a.m., London 3 a.m. to 11, New York 8 a.m. to 5 p.m., Australia 6 p.m. to 2 a.m., Japanese is 7 p.m. to 3 a.m. Now, reminder, this is all Eastern time. So if you're, let's say, in Pacific time or any other time zone, you're going to go to the link down below and it'll convert it into your own time zone. Okay? So the question I have is like, what do we do with currencies? Well, we actually buy and sell them. Buying is considered going long and selling is considered shorting the market. So as far as buying, right, this is a market that's considered bullish. An increase in demand causes the exchange rate to go up in value. A lot of people say you want to buy when the market is low. If you look at the diagram at the bottom center, you would want to buy at the lowest point in the market. So as the currency increases in value, you earn an income. Now at the very top of the market, again, this is shorting the market, it is considered bearish. A decrease in demand increases supply and the exchange rate goes down in value. So again, we want to buy low and we want to sell high. This industry is completely recession proof. As long as you are on the right side of the bed of the trade, you can earn an income. So you want to sell when it's high. So on the way down, you can actually earn an income by shorting that trade. Okay. So for this next slide, we have something that's very spoken about in Forex, and it really pertains to you earning an income. You see, a micro pip, referred to as a micro movement, is one movement in the market. A pip, referred to as point in percentage, is actually 10 movements in the market. You see, let's say we're trading this currency pair USD JPY as an example. Let's say our entry price is at 110.650 and our stop loss or take profit is at 110.950. Okay, there's going to be a difference of 30 pips right in there, or that's going to be 300 micro pips, 300 movements in that example. For Euro USD, right, we have an entry price of 1.16500 and we have a stop loss or take profit of 1.17570. If you subtract those two numbers, right, you're going to get, I believe, 100 pips in movement or 1,000 micro pips in movement. Now, I want to give you guys this example really quick. The number farthest to the right of any price is going to be your micro pip, and the number directly to the left of that is going to be your pip. So again, for USD JPY, the zeros would be the micro pip, right? And the number directly to the left of that is your pip. For Euro USD, again, the zeros are the micro pip and the sevens would be considered your pip. For Euro USD and for USD JPY, those are very simple examples, but now we have a commodity like gold, XAU USD. Our entry price 1260.65 and then our stop loss to take profit of 1265.00. When you subtract any numbers, by the way, to find what unit of measurement you're actually seeing in the market, I just want you to subtract those numbers but remove the decimal. So you're going to take 1260.65 minus 1265.00, subtract those two, and I believe that's 435 micropips of movement, and that is 43.5 pips in movement in the actual market. So please, I would pause this video right here and I pretty much try to understand this, but this is going to let you know exactly how the market is moving. Now, moving into this lesson, the main question now becomes, John, how much money do we make per pip? Now, I know in the stock market, we use the terminology that says, $10 per share, $20 per share. Now, in Forex, we use lot sizes. So the simplest way that we can put this is that a 0.01 lot size is actually equivalent to 10 cents per pip, right? A 0.10 lot size is equivalent to $1 per pip, and a 1.00 lot size is equivalent to $10 per pip. Now, any number that's to the far right, the second number after the decimal, that is considered your cents place. So a 0.01 is 10 cents. However, a 0.06 is considered 60 cents. Moving on to the next one, a 0.10 lot size, any number right after the decimal is what we consider single digit gains. So again, 0.10 is $1 per pip. But if we execute a 0.80, that is considered $8 per pip because again, it is single digit gains. And finally, we had the number right before the decimal, and this is considered your double digit gain. So again, 1.00, $10 per pip. However, we have a 9.00, it is $90 per pip. All right, so right over here, we have our risk management formula, and I want to let you know right now that you're always in full control of how much money you are risking and how much money you are gaining. So right over here in this formula, you have the dollar amount you're willing to risk in that trade, and you're going to divide that by the micro pips risk in that trade idea, and that'll provide you with the lot size you need to get your desired result. So to really put this into perspective for you, we have Euro USD as a trade idea for a swipe trade, harmonic scanner, whatever the case is. And let's say that professional, that trade idea says, hey, look, the risk is 40 pips and the gain is 80 pips. Now, your balance in your account hypothetically will be $500. So let's say you're willing to risk 5% of your account. 5% of 500 is $25. Now, again, that's 40 pips that you're risking in that trade idea, but it's going to be 400 micro pips. So you're going to divide that just like you see on the screen here. Divide the 25 by the 400 micro pips, and that'll give you a lot size of 0.06 because you only wanted to risk $25. So again, you want to risk 25. You got to be able to use a 0.06 lot size to only risk that amount. John, I understand I'm risking that amount. I got my lot size, but what about for the gain? You see, you're going to take that lot size of 0.06, that's 60 cents per pip, and you're going to multiply that by 800 micro pips, which is what the gain is, and that'll give you a result of a surplus of $48. So again, really quick, $500 in your account, you're only willing to risk 5%, that's $25. Divide that by the 40 pips, and that'll give you a 0.06 lot size, which is, again, 400 micro pips, and it's for the gains. A 0.06 lot size multiplied by 800 micro pips will give you a result of $48. So this is the last lesson in the entire video, and there's different types of trades that we can execute when trading Forex. The first kind is called a market execution, which is jumping into the market as a buyer sell at the current market price. So when you're executing a trade, you don't need to put in an entry price because your entry price is the current market price. All you have to do is copy the stop loss. All you have to do is copy the take profit, enter your lot size, and you should be good to go. So you enter the market when? Right away. Now the different kinds of trades are also pending orders, or what I would consider them as basically traps. So a buy stop, right, is an order placed above price and the price keeps going up. So if you guys look at the diagram, there's going to be that little blue dot right there. You're going to place the entry price above the market price, and as the current market price breaks through the entry, the trade will activate and it'll break through it and keep going up into your take profit. So a buy stop is a breakthrough into your take profit. A sell stop, right, is a breakthrough to the downside into your take profit. So a sell stop is an order placed below price and price keeps going down. So again, current market price is at that blue dot, right? But you place a trade below. So as the current price reaches your entry, which is that red line, it'll break through it and go down into your take profit. The limit orders are known as rebounds. So a buy limit is a rebound to the upside, and a sell limit is a rebound to the downside. So buy limit is an order placed below price and the price goes up. But we know the market's moving down, right? Current market price is at that blue dot. If it goes down and reaches that entry at that green line, it'll bounce from there into the upside and into your take profit. The sell limit, get order placed above price and then price goes down. So again, current market price is at that blue dot, and as it reaches the entry price at the red line, it's gonna bounce from there, it's gonna activate, and then it's gonna rebound down into your take profit. And those are the types of trades that we have I would make sure I study this, but these are considered traps or pending orders, and they only get activated when the current market price reaches the entry of the limit orders or the stop orders, which then puts you into the actual trade and you're good to go. The trade activates and it'll do its thing. Now, some trades might not activate. If the trades don't activate, that's completely fine. You're just going to swipe left on your MetaTrader 4 and you're going to cancel that trade out, but not all pending orders hits. That's completely fine. That's normal, but you should be good to go understanding this concept. So with that being said, you just understood very basic and simple concepts to really put you in a winning position when it comes down to trading Forex. Don't forget, go through your IML Academy, go through 2 to 3 IML TV sessions per week, take notes on this entire video, and you should have a solid foundation of knowledge which you can start making money from if you take this seriously, trade the right way, and we should be good to go, guys. Thank you all so much. Hope you guys enjoyed the video, and we'll be talking to you guys very soon.